Thinking of getting a reverse mortgage to fund your retirement? Here's a no fluff, step-by-step guide to getting a reverse mortgage from start to finish. Reverse mortgages sound complex, but it's actually fairly simple when you go step by step. First step is comparing lenders. Make sure you reach out to several different lenders to get an understanding of which reverse mortgage product is going to be right for you. There are several different products when getting a reverse mortgage, and some of them may not be as beneficial as the next. Reach out to a broker such as myself or your local credit union or bank to get an understanding of which reverse mortgage is going to be most beneficial for you and if it's actually the right option. Number 2 is mandatory counseling. Once you've picked your lender or your broker and you've started the process, you need to go through a mandatory counseling session in order to understand the risks that you are getting into with a reverse mortgage. This is an education class that lasts a couple hours, usually online, and goes through the step-by-step process of a reverse mortgage to ensure that you and your heirs understand the actual reverse mortgage process and what you're signing up for. Number 3 is submitting your application. Once you've gone through your mandatory counseling, you need to get back with your lender to give them the certificate or your counseling and then submit your age, your date of birth, your social for that lender to pull credit and pull in the data needed in order to start the process of a reverse mortgage. Number 4 is the home appraisal. Once you've submitted the application with all the documents that the lender needs, you need to order an appraisal or have the lender order an appraisal on your property to understand the value in order to calculate how much proceeds are being given to you through the reverse mortgage. Number 5 is underwriting review. Once you've submitted your application and the appraisal is back, you're going to have the lender submit your application with all the documents and the appraisal to the underwriter to help determine your qualifications for a reverse mortgage. The underwriter is going to look at your credit, they're going to look at your income, they're going to look at the appraisal, and they're going to determine, okay, based on the equity that this homeowner has, this is how much they can receive through the reverse mortgage. Now, these figures can be calculated as an estimate at the very beginning of the process when you're determining your lender. So they're mostly just going to confirm that the lender has set everything up correctly and make sure that you don't have any tax liens or any major debts that need to be paid or going to hold up the process altogether. If the underwriter finds that you have maybe tax liens or major collections, they're going to contact you to initiate what's called a life expectancy set aside. What this is they're going to take the amount that they determine in a percentage. They're going to take that out of the reverse mortgage proceeds that they're giving you to set that aside for property taxes, insurance, and HOA to make sure those are paid throughout the term of the reverse mortgage. What they're saying is we've determined that this person isn't going to be fiscally responsible to pay the property taxes and the homeowner's insurance on the property. So we're going to set aside an amount to pay those for them. So this isn't saying that you don't qualify for a reverse mortgage. They're just making sure that you're responsible, not falling behind on the property taxes and insurance that have to be paid throughout the lifetime of the reverse mortgage. Number 6 is the good part. Close the loan. Go sign all the documentation. Have the lender have a notary come to you, or you go to the title company to sign that loan package. This is fairly straightforward. Just make sure that you're doing your risk exercises beforehand because there is a lot of documentation that has to be signed. Number 7, even funner part, is receiving the money. If you're receiving a lump sum or monthly payments or whatever it may be, you're going to receive this after closing and after disbursement of the loan. This means that you're going to sign your paperwork on one day, and then the next day, once they've dispersed the loan, they've made sure everything is signed, they're going to give you the funds for the reverse mortgage. Or if you're not receiving funds for the reverse mortgage, they're going to pay off the current lien on the property to make sure that you don't have any more monthly mortgage payment. And that's it. With the right guidance, a reverse mortgage can be fairly straightforward process. If this video has been helpful to you, or you're looking to compare numbers for a reverse mortgage, maybe for yourself or a family member, comment below or reach out to me. Thanks again for watching, guys. Please like and subscribe. Help me grow this channel to show that reverse mortgages aren't always a terrible thing. There's a lot of negative energy, a lot of negative news about reverse mortgages, but in essence, they're just a misunderstood mortgage product. They aren't for everybody, but they are for some. Thanks again for watching. I'll catch you on the next one.